Hey, it's your girl Wendy, and let me tell you, something huge is happening in the world of money. We're talking about a financial revolution. Cryptocurrencies are changing the game, and honey, you don't want to be left behind. This isn't just about making a quick buck. This is about a fundamental shift in how we think about money. For years, the little guy has been at the mercy of big banks and Wall Street, but crypto is putting the power back in the hands of the people. It's exciting, it's disruptive, and it's creating a whole new generation of millionaires. So buckle up, because things are about to get interesting. Now, you know Wendy keeps her ear to the street, and the word on the street is that big money is pouring into crypto. We're not talking about your cousin's friend's roommate who dabbles in Dogecoin. We're talking about institutions, hedge funds, and even governments. Remember when Wisconsin doubled down on Bitcoin? Or when Abu Dhabi dropped almost $500 million into the crypto market? Honey, that's just the tip of the iceberg. Fidelity, one of the biggest names in finance, is buying up Ethereum like it's going out of style. Even Wall Street giants like Barclays are getting in on the action. This isn't a fad, my friends. This is the future of finance, and the smart money knows it. Listen, when governments start paying attention to something, you know it's a big deal. And let me tell you, governments around the world are scrambling to figure out this whole crypto thing. Some are embracing it, some are fighting it. But one thing's for sure, they can't ignore it. We're seeing countries like El Salvador adopting Bitcoin as legal tender. We're seeing regulators in the US finally starting to provide some clarity on the crypto landscape. This is only going to lead to more adoption, more investment, and more growth. Remember what happened with the internet? Governments were slow to adapt, but eventually, they had no choice but to get on board. The same thing is happening with crypto. It's here to stay, and the sooner everyone realizes that, the better. Now, let's talk about the OG cryptocurrency, Bitcoin. Bitcoin, the pioneer of the cryptocurrency world, has been making waves since its inception in 2009. Created by the mysterious Satoshi Nakamoto, Bitcoin has revolutionized the way we think about money and value. You know, the one that started it all. Bitcoin's journey from a white paper to a $1 trillion asset is nothing short of extraordinary. It has faced numerous challenges, from regulatory scrutiny to market volatility, yet it has emerged stronger each time. Bitcoin is often called digital gold, and for good reason. Just like gold, Bitcoin is seen as a store of value, a hedge against inflation, and a safe haven in times of economic uncertainty. Its decentralized nature makes it immune to government control and manipulation. Just like gold, Bitcoin is scarce. This scarcity is built into its very code, with a hard cap on the total number of Bitcoins that can ever be mined. This makes it fundamentally different from fiat currencies, which can be printed in unlimited quantities. There will only ever be 21 million Bitcoins, and that limited supply is what gives it value. As more people become aware of Bitcoin's potential, the demand for it continues to grow, but the supply remains fixed. But here's the thing, we're seeing a Bitcoin supply shock. This phenomenon occurs when the available supply of Bitcoin on exchanges decreases significantly. This can be due to various factors, including increased accumulation by long-term holders and institutional investors. Whales, those are the big players holding massive amounts of Bitcoin, are moving their coins off exchanges. These large holders are often seen as market movers, and their actions can have a significant impact on Bitcoin's price. They're locking them away in cold storage, signaling that they're in it for the long haul. This is huge. Cold storage refers to keeping Bitcoin offline, away from the internet, which makes it much more secure from hacking and theft. When supply goes down and demand stays the same or even increases, guess what happens? The basic principles of economics tell us that this imbalance leads to higher prices. The price goes up, up, up. We've seen this pattern play out multiple times in Bitcoin's history, and many believe it will continue as adoption grows. We're talking about a potential rocket ship ride for Bitcoin, and those who own it could be in for a wild ride. As more people and institutions recognize Bitcoin's value, the sky's the limit for this digital asset. Buckle up, because the journey is just beginning. Section 5. Is the crypto market overheated? The MVRV ratio explained. Now, I know what you're thinking. Wendy, this all sounds too good to be true. The crypto market has been on a wild ride, with prices soaring to new heights and then plummeting just as quickly. It's enough to make anyone skeptical. But that's where understanding key metrics like the MVRV ratio comes in handy. Is the crypto market a bubble that's about to burst? This is a question on many investors' minds. The fear of a sudden crash is real, especially when we see such rapid price increases. But bubbles are not always easy to identify until they pop. So, how can we get a better sense of where the market stands? And you know what? It's smart to be cautious. Investing in cryptocurrencies can be incredibly rewarding, but it also comes with significant risks. Being cautious doesn't mean avoiding the market altogether. It means making informed decisions based on solid data. That's why we need to talk about the MVRV ratio. This metric can provide valuable insights into whether the market is overheated or undervalued. By comparing the market value to the realized value, we can get a clearer picture of the market's health. Don't let the fancy names scare you. The MVRV ratio is actually quite straightforward once you break it down. It's a tool that can help you make more informed investment decisions without getting lost in the technical jargon. The MVRV ratio basically compares the current market value of Bitcoin to its realized value. The realized value is essentially the average price at which all current holders acquired their Bitcoin. This comparison can tell us a lot about market sentiment. Think of it like this. If the MVRV is high, it means the market might be overvalued. A high MVRV ratio suggests that the current price is significantly higher than the average price paid by investors, indicating potential overexuberance. If it's low, it could be undervalued. A low MVRV ratio indicates that the current market price is close to or below the average price paid by investors, which might suggest a buying opportunity. Right now, the MVRV is flashing a warning sign. This means that the market is potentially overvalued, and we should be cautious about making new investments at these levels. It's telling us that the market might be a little too excited. When everyone is euphoric and prices are skyrocketing, it's often a sign that a correction could be on the horizon. But here's the thing. Even if we see a correction, and corrections are normal in any market, they are not necessarily a bad thing. Corrections can help stabilize the market and provide new buying opportunities for savvy investors. The long-term potential for crypto is still massive. Despite short-term volatility, the underlying technology and adoption trends suggest that cryptocurrencies are here to stay. So, while it's important to be cautious, it's also crucial to keep an eye on the bigger picture. Section 6. Short-term versus long-term holders. Who's driving the market? One of the most interesting things about the crypto market is the dynamic between short-term and long-term holders. This dynamic is a key factor in understanding market movements and predicting future trends. Short-term holders, often referred to as day traders, are constantly on the lookout for quick profits. They buy and sell rapidly, trying to capitalize on the market's volatility. You've got your day traders trying to make a quick buck by timing the market. These traders are highly active, making multiple trades within a single day. They rely heavily on technical analysis and market news to make their decisions. Their goal is to take advantage of short-term price movements, often ignoring the underlying fundamentals of the assets they trade. And then you've got your hodlers, those who believe in the long-term vision of crypto and are in it for the long haul. These investors are less concerned with daily price fluctuations and more focused on the potential future value of their holdings. They often store their assets in secure wallets and are willing to weather market downturns, confident in the long-term growth of the crypto market. Understanding this dynamic can give you valuable insights into market sentiment. By analyzing the behavior of both short-term and long-term holders, you can get a clearer picture of where the market might be headed. For instance, if you see a lot of activity from day traders, it might indicate short-term volatility. On the other hand, if long-term holders are accumulating, it could be a sign of confidence in the market's future. When long-term holders are accumulating, it's usually a bullish sign. This accumulation often indicates that these investors believe the market is undervalued and are preparing for future gains. They are willing to buy and hold, even during periods of uncertainty, because they have a strong conviction in the long-term potential of their investments. They're the ones with diamond hands, the ones who aren't fazed by short-term fluctuations. These investors are often seen as the backbone of the crypto market, providing stability and confidence during turbulent times. Their unwavering belief in the future of crypto helps to support the market, even when prices are falling. Right now, we're seeing a lot of accumulation from long-term holders. This trend suggests that many investors are optimistic about the future of crypto and are positioning themselves for long-term gains. They are taking advantage of lower prices to build their portfolios, confident that the market will recover and grow over time. They're not selling, even when the market dips. This behavior contrasts sharply with that of short-term traders, who might panic and sell off their holdings during a downturn. Long-term holders, however, see these dips as buying opportunities, further strengthening their positions. They know something that the short-term traders don't. The future of finance is decentralized, and crypto is leading the way. This belief in the transformative power of blockchain technology and decentralized finance drives their investment strategy. They are not just investing in digital assets, they are investing in a vision of a more open, transparent, and inclusive financial system. Section 7. The time to get involved is now. Listen, I'm not a financial advisor, and this isn't financial advice, but I'm telling you, the crypto revolution is here, and it's only getting bigger. The time to get involved is now before it's too late. Don't be that person who says, I wish I had bought Bitcoin when it was $10. Start small, do your research, and learn as much as you can about this exciting new asset class. The beauty of crypto is that it's accessible to everyone. You don't need to be a Wall Street hotshot to get involved. All you need is an internet connection and a willingness to learn. So what are you waiting for? Section 8. Join the Chain Reaction crypto community. If you're ready to dive deeper into the world of crypto, I've got just the thing for you. Head over to YouTube and subscribe to Chain Reaction Crypto News. They break down complex crypto topics into easy-to-understand videos, so you can stay ahead of the game. And don't forget to follow at Chain Reaction the podcast on Instagram for even more crypto insights, news, and analysis. Trust me, you don't want to miss out on what they have to offer. Remember, knowledge is power, and in the world of crypto, information is king. So join the Chain Reaction crypto community today, and let's ride this crypto wave together.